Have you ever stopped to think about where your trash goes every day? For most people, it's an invisible service. But for investors, behind this daily operation lies one of the most resilient, profitable, and hard-to-compete businesses in the world. Today, we're going to take a deep dive into the giant of this industry: waste management, or simply WM. WM doesn't just pick up your trash. It's a business powerhouse with an almost monopolistic hold on irreplaceable assets, a cash-generating machine, and a growth strategy that goes way beyond landfills. In this video, we're going to break down the complete investment case for waste management. If you want to understand how a business considered dirty can be one of the cleanest and most predictable operations for a portfolio, stick with me until the end. Let's get started. The economic moat, the unbeatable competitive advantage. To understand WM, we first need to understand its economic moat, which means its competitive advantages. Warren Buffett loves companies with wide and deep moats, and WM is a classic example. Its moat is built on two almost unbreakable pillars. The first and most important pillar is intangible assets, specifically their licenses to operate landfills. Think about it. Who wants a new landfill built in their neighborhood? Nobody. This phenomenon is known as NIMBY, not in my backyard. Because of extremely strict environmental rules and public opposition, getting a license for a new landfill today is almost impossible. The result? The number of landfills in the United States has dropped sharply. WM owns or runs about 262 landfills. That's 25% more than its closest competitor, Republic Services. These landfills aren't just holes in the ground. They are important, irreplaceable assets that give WM huge pricing power. Their smaller competitors, who don't own landfills, are forced to pay disposal fees to WM. They literally pay their biggest competitor to be able to operate. The second pillar is the cost advantage, which comes from its route density. Imagine a garbage truck. If it has to drive 10 kilometers to serve just one industrial customer, the cost is high. But if, in those same 10 kilometers, it serves 500 homes and 20 businesses, the cost per customer drops a lot. With its huge size, WM rules local markets, making routes better and spreading its fixed costs, like truck maintenance and landfills, over a much bigger customer base. This creates a natural barrier for new companies. A new competitor can't compete on price and efficiency without a similar size, which takes decades to build. And this moat now reaches into a new market: medical waste, which also needs licenses and size to be profitable. In short, WM's moat is real, lasting, and the foundation of all its economic power. Strategy and outlook, more than just trash. With such a powerful advantage, WM could just sit back. But management has been proactive, focusing on making their main business better and growing into new areas. Their strategy is built on three pillars of growth. First, improving their main business. In recent years, management has focused on yield management. This means using their strength to raise prices consistently more than inflation, while also cutting costs. They've been good at turning the growing American economy into more waste volume and bigger profits. Second, smart growth through buying other companies. WM is a natural consolidator in an industry with many small players. In 2020, they bought Advanced Disposal, the fourth largest in the industry, making their leadership even stronger. But their boldest move came in 2024. They bought Stericycle for over $7 billion. This wasn't just buying a competitor, it was entering a related and very specialized market: medical waste. Hospitals, clinics, labs. They all create waste that needs special handling and disposal, with even stricter rules. Stericycle was a company with operational problems, and WM's idea is clear: use their excellent logistics and efficiency to transform the business, aiming for hundreds of millions of dollars in shared benefits. It's a high-risk gamble, but with huge potential for returns. And the third pillar, which is changing the company's future, is leading in sustainability that makes money. WM is investing almost $3 billion to turn its landfills into clean energy hubs. The methane gas released when trash breaks down is a strong greenhouse gas. WM is catching this gas and turning it into renewable natural gas, RNG, a clean fuel. They not only use this fuel in their own truck fleet, saving money and reducing pollution, but they also sell it on the market. The goal is to make up to $500 million in profit, EBITDA, just from RNG projects by 2027. Also, they are making their recycling operations more modern. The old way, which depended on changing commodity prices, is shifting to a pay-for-service model, which is more stable and profitable, with a goal of making $300 million in profit, EBITDA. WM is turning what used to be an environmental problem into something that makes money. This is the strategy of an industry leader looking to the future. Profit drivers and financial strength. Okay, the strategy is impressive, but how exactly does WM make money, and how financially healthy are they? The profit drivers are simple and powerful. The main driver is pricing. Thanks to its economic moat, WM has the ability to raise its prices year after year, consistently. In 2023, with inflation on the rise, they were able to pass on exceptional prices, protecting and even expanding their margins. The second driver is volume. General economic growth means more construction, more consumption, more industrial production, and consequently, more waste to manage. It's a business that grows with the economy. The third is efficiency and acquisitions. Every route optimization, every synergy extracted from an acquisition like Stericycle, contributes directly to profitability. This brings us to their financial strength. Looking at the balance sheet, one number might scare you. Debt. In mid-2025, WM had about $24 billion in debt. But for a company like WM, the absolute debt number doesn't tell the whole story. What matters is their ability to pay off that debt. And this is where WM shines. The company is a true free cash flow generating machine. Free cash flow is the money left over for the company after paying for all its operations and investments. WM is expected to generate almost $19 billion in cumulative free cash flow between 2025 and 2029. This puts the debt in perspective. The company's gross debt to EBITDA ratio is around 3.2, with a target of staying between 2.5 and 3.0, a perfectly healthy level for a sector with such predictable revenues. There's no concern about the company's ability to meet its commitments. On the contrary, the question is another. Capital allocation. What do they do with all that cash? A company's capital allocation policy tells us a lot about its management and how much it cares about its shareholders. WM has a balanced and smart approach. For a long time, about half of their money went into big spending, or capex. This means putting money back into the business itself. Newer, better trucks, technology to make routes more efficient, and, more recently, big investments in renewable natural gas plants and recycling centers. The rest of the money is split between buying other companies to help them grow, like we saw with Stericycle, and giving money back directly to shareholders. WM has a long history of paying out and increasing its dividends. Plus, the company also buys back its own shares, which means there are fewer shares out there, and that makes the remaining shares worth more for the shareholders. This policy shows that the management knows how to balance future growth with rewarding its investors right now. And speaking of management, the leadership is steady, with CEO Jim Fish in charge since 2016. Even with a planned change for the CFO position in 2025, we don't expect any big changes to this smart and careful way of handling their money. Points of attention, risks and uncertainties. Even a top-notch company like WM faces challenges. Let's break down 4 main things to watch out for. Risk number 1, acquisition integration. Risk. Buying Stericycle is a big deal, but it's not without its problems. Stericycle was a company that had operational issues. Bringing such a large and complex business into the fold and getting all the promised benefits is a huge task. If management messes up here, they might have paid too much for a troubled asset. Risk number 2, competition and pressure on profits. Even though WM is the leader, it still competes with smaller local players who might offer lower prices to win contracts. Also, WM's current profit margins are at record highs. The question is, how long can these high profits last? If prices go back to normal or the economy gets weaker, it could push those profits down. Risk number 3, long-term trends. Society is changing. There's a growing push for zero waste, more recycling, and less trash overall. In the long run, this could mean less high-profit trash going to the company's landfills. While the company is doing well with recycling and renewable energy, a big change in how much trash there is a risk to keep an eye on in the coming decades. Risk number 4, commodity price swings. Some of WM's money comes from selling recycled materials like cardboard, plastic, and aluminum, and from renewable energy. The prices of these things can go up and down a lot, and they're affected by global stuff that the company can't control. This can make their income and profits jump around. These risks are real and shouldn't be ignored. They're the main points of the bear case, the argument for why the stock might go down, and need to be weighed against the company's strengths. Conclusion, the investment thesis summarized. So let's put all the pieces together. What do we have with waste management? On the good side, the bull case is clear and strong. We have a market leader with a steady and essential business model. It has a wide and lasting economic moat, based on irreplaceable landfill assets and cost advantages from its size. This gives it amazing power to set prices. Management is doing a smart job, growing into the promising medical waste market and turning sustainability into a moneymaker with investments in renewable natural gas and recycling. All of this is backed by strong finances that create a ton of cash flow, which is used wisely to grow and reward shareholders. On the flip side, the bear case points to the risks. Bringing Stericycle into the company is a big challenge to get right. Competition and the chance that record-high profit margins might go back to normal could limit future earnings. And in the long run, social trends to reduce waste and unstable commodity prices are uncertainties that are out there. The main question for investors is this: is the strength of its main business, plus the new ways it's growing in healthcare and sustainability, enough to overcome the risks of getting things done and the long-term trends? I hope this analysis was helpful for you. The waste management business is much more complex and interesting than it seems at first glance. If you liked this video and want to see more analyses like this, please hit the like button, as that really helps our channel reach more people. Subscribe and turn on notifications so you don't miss our next content. And now, I want to hear from you. Leave a comment below. What's your opinion on waste management? Do you see more opportunities or more risks in the company's strategy? Do you believe in the success of the Stericycle acquisition? Let's continue this conversation in the comments. Always remember that this video is purely for educational purposes and does not represent a recommendation to buy or sell assets. Always do your own research. Thanks for watching and see you next time.